Order, order. Welcome to the Treasury Select Committee on Tuesday the 17th of December 2024. Today we're continuing our inquiry about the acceptance of cash in the UK, and today we're talking to various representatives of businesses. Sadly, we don't have the Local Government Association with us, and we don't have representatives of larger retailers, but we are seeking evidence from them through other routes, and hope that that will inform our inquiry. But I'm pleased to welcome from my left to right James Lowman, who's the Chief Executive of the Association of Convenience Stores, Ross Borkett, who's the Banking Director for the Post Office, Carrie Aspin, who's the Senior Researcher at the Union of Shop Distributive and Allied Workers, also known as USDAW, and Graham Wilson, OBE, who's the Deputy Chief Executive of the National Association of British Market Authorities. And so we're really pleased to welcome you all here today. Really just wanted to go across the panel with my first opening question about whether you think cash acceptance is now, it obviously has reduced, all the evidence shows that, whether you think that cash has a future in the areas that you represent. Mr. Lowman, we'll start with you.
Yes, absolutely. So the broad picture in terms of cash usage in convenience stores is that it has been declining over a long period of time. But still represents somewhere around nearly half of transactions in our sector are by cash. In recent history, during the COVID pandemic, there was a significant increase in the use of card over that time, and that's now slightly corrected. And the other big, if you like, period of time since then has been the cost of living crisis, where we saw an increase in the use of cash, particularly as people use that as a way of managing cash flow and managing their own finances in their own household. So I think the overall trend is for decline in the use of cash. I see it taking a very, very long time to get to the point where we're into viewing it as de minimis or something that retailers wouldn't accept. Almost all of our members accept cash. There may be the odd example where someone's in a workplace or in a very, very specific location or environment where they might not accept cash, but all but a handful of our 50,000 convenience stores in the UK accept cash. So no, we see cash as being a very important part of a number of payment methods that consumers are going to be using for a long period into the future.
Thank you. Mr. Borkett, from the Post Office's point of view, you receive the cash.
Receive and provide access to it. So you're absolutely right. Our postmasters across the country are providing an increasing amount of cash services. Last month alone, we served over 3.5 billion in cash transactions just in that month. It's a staggering amount of money that we are supporting communities with, and we are seeing that grow month on month. And so we absolutely see it as a really important part of supporting communities, but we don't see it going away. I agree with Mr. Lowman. I think we will see it decline slowly over time, but remain a very, very important payment method for many people.
Aspin.
Yeah, I mean, we represent 365,000 members, and a large proportion of them are low-paid workers. And our members tell us that access to cash and cash usage is really important. So we know that for a lot of our members, cash is really important in terms of budgeting and managing their finances. So for us, we actually, we do see a future for cash. We think it's not just a choice that consumers are making. We think it's absolutely necessary for low-paid workers and for more vulnerable groups across society, and we're seriously concerned that the decline in cash acceptance is going to lead to people being left behind. So, yeah.
Thank you. Mr. Wilson.
The availability to use cash is absolutely vital to the preservation and future of the markets industry. If you look at a sort of 1,000 years of history where cash has been king in market transactions, in the last 20 years in particular, we have moved to a situation where there is a significant percentage of transactions undertaken by card and other banking means. But in the context of the audience we serve, in the context of the nature of transactions, in the context of the social role that markets play, we strongly believe that cash should continue to be a main contributor to transactional activity on markets.
Thank you very much. Lola McAvoy, MP.
Thank you, Chair. Well, Mr Wilson, it's almost like you preempted my question here, because my constituency of Darlington is a proud market town dating back to medieval times. Our first market transactions were in over 1,000 years ago, and I'm particularly interested in the impact of the reduction of cash on our heritage and our culture. I feel quite strongly that haggling and bargaining is at markets is part of our culture, especially for those, as Ms Aspin mentioned, on a low budget. And I'm interested in your analysis of the impact of cash reduction on this cultural element as an activity, but also as a budgeting tool.
Yes, I mean, when in anticipation of sort of appearing at today's sort of hearing, we did a snap survey of our membership. And it's interesting that one market in particular said since COVID, they have moved to take something of the order of 90% in card transactions. That is exceptional. We think that around, based on the other returns we received, around 30 to 40% of cash transactions now sort of take place, card transactions now take place in markets. But most markets continue to rely for the majority of the transactions on cash transactions. And I think this arises from a number of reasons. First of all, markets, the people who trade on markets tend to be families or individual traders, and they have a history of using cash. Particularly in the context that the majority of our traders are 45 plus and come from a tradition where cash has been used. Secondly, our research shows that the majority of people using markets come from an older age group and also from lower income groups. And those sort of groups tend to want to use cash rather than rely on other forms of sort of transaction. We also find, based on sort of feedback from our membership, that the majority of transactions in markets are small in nature. It's not like going to a supermarket and taking a lot of commodities off the shelf in a trolley. You actually go and buy perhaps half a dozen apples or half a pound of potatoes. And the nature of the transactions are small. In that context, cash makes more sense, and markets find it helpful to deal in those. I think in recent years, markets have taken on very much a community and social role. And this is very important to the markets industry. We're seeing markets sort of set up in disadvantaged areas, being able to provide the local community there with fresh fruit and vegetable, opportunity to buy other sort of commodities. And it's this social role, I think, that markets need to embrace more effectively. And certainly the industry is looking very carefully at how we can enhance our social value to local communities.
McAvoy.
Thank you. I think that's fascinating to me, because I really recognise that the social value role of the market in my constituency. I think we talked before you came in, and there's quite a lot of us on the committee who've got markets. Interested as well on the auctioning element. So in Darlington, they've just recently restored a bell where they used to ring it historically, and everything in the market was then auctioned off, and people would come in for a bargain. And it fascinates me in terms of the food supply chain part of it as well. I wondered if you had any thoughts on how it would have a knock-on effect if you removed the sort of... So my assumption is that it's harder to haggle with card, and if you have any thoughts on that, I'd be grateful. But I think if you remove the auctioning element, how does that impact markets on the whole in the way that they traditionally operate? And a secondary point just on regional disparity. So if you had any analysis when you'd done your SNAP survey about whether different regions take more cash or card, or any thoughts on that?
Dealing with that last point first, I think you find particularly the northern markets, Midlands and northern markets, our survey suggests take more cash. The survey indicated that London markets, particularly one or two, such as Borough Market, which has a fantastic reputation as one of the best markets in the world, take a significant amount of card sort of transactions. But it was certainly in the North and Midlands, and particularly the urban centres, where there was significant cash transactions. In terms of sort of the auctioning and the sort of bartering, sadly there is much less of that now that goes on at markets. Markets are very colourful places. The sort of activity, the vibrancy are characteristics that make markets what they are. But unfortunately, the sort of calling out to sort of come and buy and the haggling are not as prevalent as they were 20, 25 years ago. So there is much less emphasis on that as a reason for cash transactions. Primarily based on our survey, it is in respect of the sort of nature of our audience, the elderly and the lower incomes, and the nature of the sort of transactions, which are relatively small.
That's great. Thank you very much for your contribution.
Thank you. John Grady, MP.
Yes,
you have a declaration, I think.
I should first of all mention that I'm a member of USDAW, of course, Ms. Aspin works for USDAW. I should also mention, actually, my first job was on a market stall when I was 14, and it was a brilliant job. I'd still say it's the best job I've ever had. Until this one. And so, Mr. Wilson, just a few quick-fire questions. In 2020, your organisation commented that efforts to persuade traders to accept cards had met with limited success. Is that still the case?
COVID was actually a watershed in the sort of transition to sort of card and other banking arrangements. Because markets took a leading role in sort of responding to the COVID sort of crisis, new ways of sort of providing a market service were implemented, and many of these required online transactions. So there was a significant uplift as a result of COVID, and that prompted a lot of traders to look at ways in which they could take payments in alternative form. The markets industry, although it has a high level of older traders, it is attracting significant numbers of new starters. And these new starters are much more inclined to be savvy with social media, card payments. So we are certainly in a much better position than we were in 2020. Firstly, as a result of the COVID crisis and what we had to do to respond to that. And secondly, because we're seeing a new generation of market traders emerge, and they are looking at ways of sort of dealing in trading in different and up-to-date ways.
And a follow-up question is just as follows. From a point of view of cash collection in markets, in 2022, I think your survey found that half of market operators no longer carried out cash collection from stalls. What's the trend? Is it still the same way, reducing? And are these markets going cashless, or are traders making their own cash handling arrangements?
In terms of collection for fees, the survey we did last week suggests that the vast majority of market operators now collect fees by way of card, bank transfer, direct debit, standing orders. Where cash is collected, it's normally in respect of casual traders who just come and fill an empty stall on the particular day. But I would say that since we did our survey in 22, there has been a significant uplift of collection by banking and other means.
Thank you very much. Lola McAvoy, MP.
Thank you, Chair. Just a final one on, you just sparked something in me, because was shopping in our market this week, and they had fantastic new young people who'd been creating really beautiful artisan products, and they obviously accepted card. What would your message be to new starters, new entrepreneurs getting into the trade about, is there an opportunity for them if they accept cash to broaden out the people who might spend at their stalls?
Yes, I mean, we want the markets, obviously, to reflect sort of modern trends. We do, as I said at the outset, we do think there is a very real role for cash going forward. But we try to encourage all traders to use multiple forms of sort of transactional activity, so they can take advantage of all sort of opportunities to enhance their business. Not only in terms of sort of the cash and card situation, but using social media to promote, ensuring they have the facility to do online sales. It's a whole raft of measures to actually bring markets into the current sort of century.
And can I just ask, for these micro businesses that are starting up, are there any blocks to them to using cash? Because we heard evidence at different committees of how it can be quite cumbersome to then take the cash, deposit it, and that sort of thing. Do you think is there anything wider that we could be asking other industries to be doing to support micro businesses to take cash?
I'm not aware. We've certainly had no sort of feedback of any sort of difficulties or problems emerging in sort of operating markets via cash. No, it's something that hasn't come across our radar.
Thank you very much. You mentioned, Mr. Wilson, some interesting research you've done both from 22, which I think we may have seen, and the work you did last week. Even if it's not a full, detailed bit of a survey work, could you please share that with us?
Of course,
yes,
of course.
That would be very helpful. Thank you very much. Dr. Jeevan Sandra, MP.
Thank you very much, Chair. Look, cash use has declined from 50% of transactions in 2013 to, I think, 30% before the pandemic and 20% today. The panel seems to believe there's always going to be a role for cash, but can I ask, why do you think it won't go to 0%? Perhaps like Mr. Lowman, then perhaps we go down.
Yeah, I think that a couple of reasons. I think some customers will always prefer to use cash. There are some consumers who are unbanked and operating cash. Typically, that is their normal way of operating. I think people who, retailers of all kinds, will be reluctant to be entirely reliant on card payments. When you think back early this year to the CrowdStrike issue, for example, where due to some problems with the security system and online antivirus security system, a number of card payment systems went down for certain retailers. It's luck of the draw, really, about how you were affected. But there are times when, and there have been other examples as well, where consumers haven't been able to pay by card, but the technology has broken down, it hasn't worked for a period of time. So cash is a very, very useful fallback in circumstances like that. And I think there'll always be an element of preference around that. There is a tendency towards, the sorts of consumers and sort of retailers who are more likely to have higher proportion of cash transactions. If you've got if you're dealing with small baskets, very, 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 very small transactions, which in our sector the average is £8, just over £8 per basket. That's the value of a basket, and obviously many of them are smaller than that. Independent businesses as well that may not have the technology in store to accept cards. Most do now, pretty much all do, but not every single one. Rural sites. Places that aren't maybe selling high value items like, for example, fuel. So pretty much all retailers who would accept fuel will accept cards, and the proportion of cash in those businesses will be less if they're petrol stations. But when you've got other sites, particularly low value sites, they're less likely to have that technology. So for all those reasons, I think we will continue to see a decline. But no, I don't see it going to zero. I think cash will continue to be part of the way we accept payments from consumers.
That's fair enough. Does any of the rest of the panel have anything to add to that?
Mr. Borkett?
Very similar. I think it is down to need and choice, and I think we will continue to see that. I think in particular, if you look at those who are on low income, we definitely see a bigger preference towards cash, but also those who are financially and digitally excluded, and that's not just the elderly, and there's been research this year by Link that's been looking into to this, and actually financial exclusion being growing in young people. And so I think it is something that from a budgeting perspective it's much easier to do that in cash, and we will still see both a need and a choice from some people to use it.
Aspin?
Yeah, I think all I would add to that is, in terms of our members, we've seen a clear correlation in recent years from the cost of living crisis and higher prices and high inflation driving a trend and a return to cash usage. So we certainly don't see it fully declining.
Wilson.
Yeah, just one other point to sort of mention to addition to what I said earlier. Many markets sort of operate in open spaces, and traders come on a day and then at the end of the day pack up and go home and then come back another day. We found that in respect of people who want to use card sales in those open spaces, one of the big issues raised by our members is Wi-Fi connections. It was interesting when we did our survey last week. Several of our rural members said one of the biggest obstacles they had was to getting traders to use card was the poor Wi-Fi connections in their area. And there's nothing worse than sort of saying to a customer, can you wait for 5-10 minutes while I get a signal before I can take the payment? So that was an additional issue that was raised that was hindering some of the movement to sort of card and other banking payments.
Mr. Wilson, I'm also from a market town, 803 years old, I believe. Maybe not quite as...
competition here on the
We'll see where we get to.
No competition, Chair.
I was interested, you said that people prefer to take small payments in terms of card. A naive view would be that, well, you're not going to lose any change from a card transaction. So could you just explain to the panel why market traders prefer small payments to be made in cash?
I go back to sort of, what I said earlier about the history where in markets cash has been king for many, many years. But the sort of feedback we've received is that the majority of transactions in markets are often sort of £2-3 and traders prefer that transaction to be conducted by cash means. I think part of it is historical tradition, part of it is the way they have been brought up. I said earlier that the age profile of the majority of market traders is 45 plus. It's something in their blood that I think they have been used to, are comfortable with, and the customers they serve, particularly the elderly and those on low income, are comfortable in working within a fixed budget. So those are the sort of reasons why the transactions are in cash and continue to be so.
It's not the size of the transaction, it's the historical tradition.
Well, it's the nature of the transactions at the market are by and large small in nature. You don't get many transactions at a market stall that is £15-20 or more. What we tend to find out is the majority of transactions are in single figures, and what we also learn from our survey is that the traders are comfortable in those situations in the context of the history, in the context of how they have the relationship with their customers. They want to deal in cash.
Yeah, I'm not sure I'm quite getting it, but it's best to move on. So I used to work in my dad had a shop and I've worked in it, and I was thinking in terms of the blood, I suppose we use cash transactions for, as has been mentioned, over 1,000 years. We seem to have moved quite fast. So I suppose I'm slightly struggling with that, but maybe we'll move forward. Just finally, I suppose for you and the markets is probably the most important. If we are to move to a completely cashless society, would you like to see more support for market traders to help move towards cards?
As I said earlier, I think it's vital that we retain cash as an element. If cash is removed, it will be a very severe blow to the running of markets. And with all the goodwill in the world in terms of offering training, offering support, I think it will be a case of many of the market traders who are in the age group that I have indicated will say, I'm sorry, this is too much of a change. We are not going to trade any longer.
Thank you very much. Lona McAvoy.
Thank you, Chair. Ms Aspin, I'm interested in the the low-paid element and the access to cash, and specifically in supermarkets, because obviously a lot of your members at USDAW work in supermarkets, and I can really remember, I think there's a preference for having somebody at the checkout using the traditional checkout method if you're on a low budget, because you can always say, oh no, take that off, and it's less of a wait. You know, there's elements about behaviour if you're budgeting that you might have counted up how much you think it's going to cost, and then you don't want that issue to be on the self-checkout. I just wondered whether you think supermarkets are doing enough to support cash acceptance and facilitate low-paid people and people on a low income at that checkout point.
Ms. Aspin.
So the majority of the retailers where our members work, they're still accepting cash. That's obviously helpful to those on lower incomes. And in terms of the self-service and the checkout, we've not seen any evidence in terms of the budgeting difference between checkout and self-service. I'm not saying that's not the case, but that's not something we've heard from our members.
Do all self-checkouts in all of our supermarkets, they all accept cash and card?
So I think some of the machines are now card only, but I don't think that there's always an option to pay with cash within the stores, at least in the majority of cases and the majority of retailers where we have agreements.
Thank you. Do you have any evidence of whether there's a longer queue at where there's perhaps a joint till and one compared with the card-only tills? Any research being done?
So we haven't seen any evidence of that, no.
Rachel Blake MP.
Thank you, Chair. My questions are for the Post Office. So in your own evidence, you recognise that so long as deposits services are easily available, businesses would continue accepting. And you talked about how the framework ensures that businesses are not turning customers away. The British Independent Retailers Association said that most businesses said that they have no trouble obtaining cash, but of those who do, many said the top two reasons were post office and bank locations weren't convenient, and bank and post office opening times were inconvenient. To what extent does cash acceptance rely on a functioning post office network?
I think there is a major reliance. If we look at the trend over the last 10 years and the way that cash usage has changed, we have seen more and more customers come to us for both withdrawals, but more importantly for deposits, in particular as bank branches have changed their bank networks. So we see more businesses come to us to deposit, and certainly when we responded to the Treasury's consultation around access to cash, we made the point that we felt that if there were good, convenient places to deposit cash, then it would be easy for businesses to continue to accept it, and that would provide a good level of protection around acceptance. As we've gone through these few years, and obviously we're only just seeing the first few months of access to cash come in, and I think we're starting to see additional interventions come in from those new regulations, which we welcome. We need to, I think, keep looking at whether that's going to follow through. Are we going to always have acceptance in all places? And certainly from our perspective, we think businesses generally should have a choice as to how they serve their customers. But I am worried that as time goes on and cash overall declines, we might get to a place where we do leave people behind. And I do think we should consider whether essential services should have some form of mandate to make sure they continue to accept cash, and that we give certainty to businesses early. That is a direction we may want to go. But back to your sort of point around convenience. So our network operates under a set of access criteria. So we have over 11,500 branches across the country in almost every community to try and provide convenient access to cash, and many of our branches are open later in the evening or the weekends. We've got 4,000 branches open on a Sunday as an example, and so that helps provide additional access, probably more than many bank branch networks have done previously, to services, and we've certainly seen that in the level of cash that has now come through the network in the last 5 years.
The Post Office is currently consulting on 110 Crown Post Offices closing, including 9 in the cities of London and Westminster. Is cash at risk under this review?
So we are consulting around franchising those 108 branches that we still directly manage. So all of our other branches operate under a franchise basis, and we've had a long stated intention to move to a fully franchised business model. So we are consulting about those branches, but we will continue to meet our access criteria of having a presence in line with those geographical access criteria. So when we're looking and consulting around those sites, it won't be a case of we're not going to have a service in that community. It'll be about looking at how we're providing that service in those local communities.
And you talked about access to cash.
Yes.
In terms of acceptance of cash in businesses, we've established that the network is really important for that in both your evidence and that of other small businesses. How will cash acceptance, given that it's not a direct function, affect your decisions on those franchises?
We will be. So cash is making up a bigger and bigger part of Postmasters businesses, and so making sure we are staying in communities providing cash services as well as other services is a key part of how we're looking at our network. So as we look at the options around franchising those sites, we'll be looking at where in those communities we're going to provide those types of services going forward, to make sure that we still support businesses with cash so they can accept cash from.
Just so that I understand, the acceptance of cash in local businesses will factor in your decision making?
Yes.
I'll just ask on the just picking up on Ms Blake's point, in the very helpful evidence that you provided, in figure 1 on page 2 of the evidence, that you have a graph showing the volume of cash transaction of transactions, and on figure 2 the value. What's interesting is that the volume seems to go up and down, but the value is definitely on an upward trend year on year. Is there any light you can shed on that? Is that more businesses coming in, or I mean, what's happening?
Absolutely. So we do think there is an increase in businesses that are using us. Also, we do think inflation's had some impact. So total number of transactions, the value of them have gone up. So we have seen some of that as well. But it has been that we are picking up more and more both personal and business customers, and they are bringing larger amounts to us.
I wanted to put some questions to Mr. Lowman. So your members work both within the network and rely on the network because of the nature of your members' businesses. What more could be done to maintain Post Office's services within your membership?
Generally, Post Office services. There's a whole range of things. I mean, we host most of the Post Office network across the country. I mean, ultimately, it comes down to retailers, and these are independent businesses who offer lots of other things, and they can make a choice about whether they offer a post office or not. If they offer one now, they might keep it, they might not. If they don't offer one now, they might choose to take it into the business. So ultimately, it's about making the choice to bring in a post office as attractive as possible for them, and that's ultimately also Ross and his colleagues to do that. And that comes down to remuneration, ease of operation, service levels, all of that together. And I think that picking out a couple of specifics within that, I think that the post office is operating in a number of very, very competitive markets actually, but in some cases growing markets. One of them would be around banking services. And that's something that's very exciting to our members, to be offering more services for two reasons. One is it's an extra income stream, but also you're making yourself more relevant to the community where you're operating. And a lot of our members are the only service, or certainly the main service, in, if you like, a secondary or tertiary area, a housing estate, a village, somewhere away from a major centre. So bringing banking services to those places is really attractive. It's also true that some of those services can be offered through other routes as well. So it's up to the post office to make that an attractive thing. And then there's loads of services. The other one I pick out will be parcels, which is a significant growing area. Obviously, with a move to online shopping, we can benefit from that and work with that by offering the point at which parcels are dropped off, but also collected by consumers. So again, it's making that as operable as possible, helping retailers to operate that often in quite small locations, so they can offer that service to their consumers. And again, in a competitive market, there are lots of people who are moving parcels around, and lots of people who are accepting parcels through different platforms. So I see post offices being in some really quite exciting and growing markets, but they're all very competitive markets as well. So the challenge for our members is, do they want to be in the business of offering those services? Often the answer is yes, because they want to become more relevant to their communities, attract more footfall into the business, and then do they want to work with the post office or another operator or another combination of operators to do that?
Thank you.
So I agree with you. This is a really exciting opportunity for lots of small businesses in their communities. But yet so many places are losing post offices and fearful of losing post offices. So why aren't more people taking up this opportunity?
Oh, I think there's a real commitment to running a post office in terms of space, in terms of staffing time, and there are other ways of doing it. You know, there's an operator called PayPoint, for example, offers some of the services the post office offers under that banner, and there are other operators. You can become a pickup point for a different parcel operator. You can offer an ATM through a variety of operators. So that's a choice a retailer is ultimately making, and I think this is very, very top line, and Ross may disagree, but you know, ultimately what you've got with the post office is a very, very strong, very, very heavily established brand. What you have with some of the other operators might be a bit more nimbleness in terms of them being able to, in a sense, maybe pick and choose some of the services they're offering and do that on a slightly different basis. But I don't quite recognise actually the picture of decline in terms of post office branches. That number has been pretty stable, and we do have members who are taking on new post office branches as well. So I think that there's real excitement about being involved in offering those services, whether through the post office or with someone else.
Thank you. I think the comments that you've made about the parcel machines and the level of competition for your members, for do they want to attract a post office service or do they want a parcel machine, and the comparative income is really interesting. Do you have any data that you can share?
I haven't got any hard data to share now. We can certainly look into it. I mean, there are various offers there, because actually one of the reasons it's difficult is because correctly apportioning the costs of operating those is really quite difficult. So you can have a model where you have parcel lockers outside, for example, relatively cheap to do, very little colleague involvement in that, versus parcel services or banking services over the counter, where there's more colleague time and training, and there's a lot of skill in order to offer those services properly. So that brings a lot more, but then also brings people into the store. And also the other thing, which is incredibly difficult to put a value on, is the value of that footfall of people coming to the business, which there clearly is a value to, but different retailers will assign different value to those customers coming to the store. There are existing customers who have come anyway, are there new customers? It's a very, very complex debate, but we can certainly expand on that a little bit more and send more information to the committee.
Thank you very much.
Thank you, Ms Blake. And if there's any data you can share with us, Mr Lowman, we'd be very grateful to receive that. Dame Harriet Baldwin MP.
Thank you, Chair. Now, obviously, for cash to be accepted by market businesses, for businesses anywhere, ultimately that business has then got to be able to take that cash somewhere and deposit it into their bank account. And so many bank branches are closing across the country, often the last ones in town, that the role of the banking hub and the post office becomes increasingly important. And I wondered if I could start by asking Mr Borkett, in terms of the role that the post office plays in providing those services to businesses. I think that's quite dependent on the framework agreement that you have with the banking sector. And I think it would be incredibly important and interesting for the committee to hear how the negotiations for the next stage of your framework agreement are going.
Thank you. So you're absolutely right. So we have a commercial agreement with 25 banks to provide the cash services over our counters. We've been in negotiation with the industry through this year. I'm pleased to say that we have concluded those discussions in November, and the banks have until March now to decide whether they plan to continue. We're very hopeful that they will continue to work in partnership with us in providing cash. But that's what underpins the services that we have in branch, but also underpins those services that we provide in banking hubs as well.
So if you're banking with one of those 25 banks, you can have confidence now that you will be able to continue to take the cash that your business takes and deposit it at the post office. And does the post office have any limits? You mentioned this astonishing figure of, I think it was 3.5 billion a week, so 42 billion annually. I think I worked that out in my head. 3.5 billion a month. And so do you have any limits if you're a business and you've had a really good day on the market? Do you have any limits in terms of how much cash you can then take down to the post office?
So we have limits at our count, so how much you can do in a single transaction. And some of our bigger post offices, you can do up to 20,000. In some of our smaller ones, it's up to 4,000. Each bank, and depending upon the account you have with that bank, will set its own limits. And I'm afraid they are different by bank, just to make this nice and complicated. So depending on type of account you've got, who you're banking with, you will have different limits. It will be different if you're a personal customer versus a business customer. And they are normally cumulative limits. So it would normally be either a monthly or an annual limit of some form. And if you reach that limit, then you will not be able to deposit with us.
Okay. And then who is responsible for the money laundering angle on that? Presumably if someone shows up with a great big sack of cash, someone, either the post office or the actual bank that's taking it, is accountable for making sure that's coming from a good source.
Banks are accountable, but we work together in trying to combat that. And you're absolutely right. We are now seeing more and more cash come through our postmasters branches, and so we have an important role to play in trying to combat that. And so we look out for suspicious activities. We can decline transactions if we are suspicious or not happy about taking it on board, and we work very closely with law enforcement in trying to identify where we're seeing, in particular, organised crime activity, and we've collectively had some success the last few years in managing to stop and arrest where we're seeing those types of challenges.
And under the new framework agreement, there are not going to be any changes in terms of the acceptance of cash for businesses, provided the banks agree to the new framework, is what I'm hearing. That you're happy with the outcome of those negotiations?
Yes.
Yeah. And then in terms of banking hubs themselves and the rules around banking hubs, we've heard about the importance of the access to cash. But are there any changes that you would like to see in terms of the banking hub rules that would change the probability that a town where the last bank closes gets a banking hub?
A good question. It's quite topical at the moment. So my simple answer is I think it's a bit early. So we've got the new regulations that have come in September. Prior to that, the banking industry had a voluntary scheme where they assessed communities and they decided whether that community would receive a hub or not. What we've seen since the regulations have come in...
But you could apply for one, though.
Apologies, yes, you could apply as a community, request a community assessment. What we've seen since the regulations have come in are communities that have previously been assessed, being reassessed, and then now getting an intervention like a hub. And so I think the bar has already been raised with the new regulations coming in, but we're only 3 months in, and I think we just need to let them play out over these next few months. The FCA has a very clear role in making sure that the outcomes around access to cash are delivered against the criteria that have been set out, and if they feel that isn't being done, I think that initially they will want to look at that. So at the moment, I think we're early, and I think we probably need to wait 3 to 6 months just to understand whether the trigger events that are occurring, the assessments that are happening, are then resulting in the right outcomes, and then if they're not, make adjustments from there.
The Post Office Limited at this moment in time doesn't have a view on this, but you'll keep an eye on it. Okay. Thank you, Chair.
Thank you very much, Dame Parrott. John Grady MP.
Thank you. Mr. Lowman, first of all, turning to the operational costs of accepting cash for your members, are they increasing or decreasing or staying the same?
They're increasing. The British Retail Consortium has estimated that the increase is about 25% over 3 years, the cost of accepting cash. And going back to the questions which Graham Wilson from Markets was talking about earlier, about that's one of the reasons why accepting very small transactions in cards is this disincentive to do that, because often there is a fixed element to that. So therefore, if you're accepting lots of those, you have lots of those fixed costs, which then affect the margin of the business. So that's why you still see quite a lot of convenience stores have a lower limit for what they will accept as a card payment, and that's a decision that they can make. So yeah, the cost of accepting cards has gone up. It's also worth saying the cost of handling cash has gone up. If you are relatively low turnover business and you have a post office close to you may even operate one, then you can bank cash cheaply with the limits that Ross talked about. But if you're not in that situation, you're generally into cash in transit, another means of handling that cash. And so, and our members actually report quite a broad range of cash handling costs, around 40p per £100 banking, up to £1.50 per £100 banking, which obviously starts to eat into tight margins quite significantly.
Okay. And is there a point at which the cost of accepting cash if you like, overrides the wish of your members to serve their customers by accepting cash? Is there a point at which you say, your members would say, we just can't afford to accept cash, relatively it's better to accept card?
Probably not, because the cost of accepting cash is entirely linked to the volume that you take. So if you could certainly imagine retailers, I do know some retailers who say we'd rather accept card. Card's just sort of easier, there's less staff time, there's less contact. People talked earlier about self-checkouts, where there's a higher proportion of transactions will be by card. And in fact, by having a self-checkout that doesn't accept cash, that makes the cost of that unit quite a lot less. So that's an option that some retailers think about. They might have a mix of two, actually, some which accept cash, some which don't. So there are incentives for retailers to move towards card if that's what they wanted. They're equally incentives to move towards accepting cash because they want to reduce those card fees. So retailers can take a view. Ultimately, they're bound by what the customer wants to do. But I think that if a retailer takes a very small amount of cash, they're still able to handle that. Whereas if you have a lot of very, very small card transactions, that's disproportionately quite expensive. So no, I think retailers will still be able to accept relatively small quantities of cash going forward if that's what their customers want ultimately.
And in your written evidence, you say that payment methods are diversifying. Could you just talk us through a bit what you mean by that?
Well, the next thing, which I think will be a big factor in payments, will be open banking, direct payments. People call it different things, but essentially where you're taking out the Visa, MasterCard part of the transaction, and it's just my bank account pays your bank account for the products I'm buying over the counter at that time. Our sector will be towards the end of that journey, I think, because we're very low value. As I say, £8 average per transaction, so very small transactions. I think where those models will start to come in will be more toward large transactions, people buying sofas and kitchen sets or whatever, and that might be a more efficient way of doing it because taking out the card costs, and they can have then a smaller cost in terms of the bank transaction there. So there's a lot of work being done on that, but I think that our sector will experience that towards the end of that journey. We don't know where that goes, and ultimately whether the cost of an open banking transaction will become less than the cost of a card transaction. And at some point that might happen, but that's speculation. And
do you have a feel for when you think this would hit the smaller stores that you look after?
It's not something that we're especially thinking about right now. It's not in our immediate frame of reference. The other diversification, of course, is card payments, but through phones, and that now is increasingly common, of course. But essentially, that's the same thing from a financial transaction point of view. It's just a different device that's doing it.
I mean, there's a paradox there, isn't there? Because with larger transactions, with your credit card, you get consumer protections, and you lose those if you pay directly with your bank. But that's for another day, perhaps. Another interesting point in your written evidence is you talk about active management of a transition away from physical cash. What do you mean by active management, Mr. Lowman?
I mean, it's whether you would do things to encourage payment by a certain method. So that might be a limit on a minimum limit on what you'd accept payment by card. It might be through self-checkouts that only accept card. There are ways in which you can influence that, which is largely driven by the operational cost of the business, actually, rather than through a preference of where we necessarily want to end up. That ultimately driven by the consumer. But yeah, there are things retailers can do which might influence that decision. But ultimately, when I speak to retailers, sometimes their cash costs are a bit higher, and they say, "I wish I could just I wish we didn't have to bother with so many cash transactions, particularly with increasing employment costs and handling that and everything that goes around that." Sometimes I speak to them and they say, "Oh, my card transaction fees have gone up. I wish I had a high proportion in cash." I think ultimately they will respond to how the customer wants to pay.
And so you're not seeing, I'm taking from that, a kind of pattern amongst your members where they're saying, as a group, say 60% are saying we want to actively move away from cash. It's a mixed bag.
No, I'm not seeing that. I mean, it comes down to no, not at all. It's a site by site, retailer by retailer decision about how they want their business to operate, and also what their customer base is, and they'll see how their customers are responding, and how they want to pay.
And you're not seeing? Are you seeing groups of retailers, or should we say a reasonable body of retailers, actively managing their operations away from cash? Would you say?
Certainly not in a coordinated way. I think the movement towards there's a broader movement towards how do we take out friction and handling in store. So that's, for example, a lot of retailers more retailers now who do accept cash are accepting it through automated systems at the till. So you put your note into the till and it spews out the change. Right. And so the colleague never touches the cash. So we're seeing those sorts of things to try to reduce friction. I think that's the driver. But I don't think we're seeing anything driven by a preference for cash or card particularly.
Okay, that makes sense to me. And in your evidence, you also say that cash usage is gradually declining. It's expected to remain a significant payment method for at least 5 years. What happens at the end of 5 years? Is 5 years?
I don't think that's a hard stop. That's probably as far as you can see, as in terms of realistically. And I think the reason we say is the circumstances around the pandemic were probably about as extreme as you could imagine in terms of discouraging people to use cash. Everyone was saying, don't touch anything. The tap and go contactless threshold was increased over that time, so it was easy, more transactions to go through that method. You had rapid increase in the adoption of technology like payment on phone. Pretty much everything was geared towards that, and still we're maintaining. I mean, for most retailers, upwards of a third of transactions were in cash at that time. So, I think that we are looking to quite a long horizon before there's a point when we consider cash not being part of our business.
Well, I'm mindful of time, so I think that's enough from me.
Thank you very much, Mr. Grady. Bobby Dean MP.
Thank you, Chair. We've heard quite a bit about market forces, the sort of needs and preferences of consumers for cash, and also firms' desirability to match that. We've also heard about the unreliability of card systems sometimes. But as part of this inquiry, we've been told that all commercial traders should have an obligation to accept cash. So that's a slightly different question. Does anybody agree with that statement? So, so all traders should have an obligation to accept cash.
No, we don't agree with that. Now, I'm saying that from the perspective of an organisation where, say, all but literally a handful of our 50,000 shops we represent do accept cash. So this is not, and I don't see that changing significantly at all. It's simply because there might be specific circumstances, specific environments. It could be within a workplace or within a sort of more sort of controlled, discrete environment where the retailer doesn't want to accept cash because they know that customer base is so inclined to be using card, and they want to take out the cost of handling cash, the systems to take cash and things like that. So I think we're not in favour of obligating retailers. We also want our members to have the maximum flexibility to offer whatever they think is appropriate for their customers. But that's it. That's not because we're seeing any time soon where we're not accepting cash in all but a handful of the outlets we represent. But I think it's an important principle that we don't think we should be told how we can and can't accept payments.
Do you not accept in saying that while that would suit the businesses and most of their customers, it might be quite exclusionary for some potential consumers?
Yeah, I think if it was, they wouldn't do it. I mean, in a sense, you can't. As a business, if you're excluding potential customers, that's a bad business decision. That's what just going to drive their decisions.
Not necessarily true, because if it's a small proportion of your customer base, you might be prepared to relinquish that for the hassle that comes with it. But then that small proportion actually are quite meaningful and important, and who gets excluded counts. So what would you say?
I just can't imagine a business doing that in a situation which wasn't so specific that there was a reason to not accept cash. I mean, as a all but a tiny handful.
I'll give you a hypothetical example. We're in a small village of which there's one person who is severely disabled and really needs to use cash in their transactions, and they've no longer got access to this business because it's just one customer, and we can afford.
That's not a realistic scenario. In a village situation, every retailer is accepting cash and will be fair. There are certain. I don't represent them. For example, a lot of football stadiums don't accept cash anymore. For example, now, and as it's not our business, but I mean that seems perfectly. That's up to them. That's their decision how they do it or not. But you can see it much more in an environment there where you've got a set group of people who are using that facility at a certain time. You might, and I think we would support a business's right to make decisions like that. In a convenience store environment, it's incredibly unlikely. So in a village, there's no way any stores in a village are accepting cash.
Essentially, we should leave it to market forces, and if the consumers start to demand it less, then retailers should be able to.
Yeah, and I think Ross's point earlier, I think, is worth considering, and I do accept this, that where we see those market forces heading towards a point where there may be some areas where you could see exclusion in certain locations because of the reduced acceptance of if cash were not accepted, that there might be something there in thinking about how do you promote provision of cash acceptance in those areas. I really can't. I think we're so far away from convenience stores or any sort of mass market level not accepting cash. It's almost quite a theoretical discussion, but I welcome that discussion about how you maintain essential services in those communities, but I think they will be maintained.
Do others want to add comment to that?
Mr Wilson.
Yes, well, given what I said earlier about the importance of cash transactions in the markets industry, I think we would probably come close to sort of arguing that it should be an obligation to
on all traders?
On all traders to accept cash.
Thank you.
Thank you.
Zee?
Yes.
Aspin?
I don't know if we would necessarily say that it should be an obligation on all businesses, but certainly essential services, for which we think things like food retail would be included, and also like pharmaceuticals springs to mind as well. You know, and I think this was reinforced in the pandemic when we saw how crucial food retail was. If there's going to be an approach where we're prioritising different sectors, then we would want to see retail viewed as an essential, food retail certainly.
Yeah, well, I think we'll probably come on to definitions about what essential goods are later on. And I accept what you were saying, Mr Lowman. I've got a statistic here about 98% of small business owners said that if a customer needs to pay cash, they would not refuse them. And it's probably because they're not in a position to turn away customers. But the large retailers, and Ms McAvoy mentioned this earlier on, are already sort of starting to phase out cash from many places. We don't have representation from the large retailers here today, but I'd welcome your thoughts. Lidl has made its self-checkouts cashless. Tesco has made 40 of its cafe sites cashless. Asda has made 14 petrol stations, but plans to go up to 68 petrol stations cashless. So it feels like the larger retailers, at least, are moving towards a cashless model as much as possible. Do you think they should be obligated to accept cash?
Well, I'm not sure. So I'm not speaking for those larger stores. In a way, it seems to me they seem to be moving towards card being the norm, but still offering a cash facility in those sites. And I think that's a very clear distinction. But no, look, as a point of principle, we don't want our members to be compelled to take any particular form of payment. We don't want them compelled to take cards, for example. It's up to them to decide, notwithstanding the fact that I think it's a situation which should be kept under review and ensuring there isn't exclusion from essential services. And if we are talking about essential services, again, during the pandemic, the government helpfully defined essential, which does include food retail. So we would expect that to be included in any such definition. But no, we wouldn't want any businesses obligated in that way.
Yeah, Mr. Borkett.
I mean, just to kind of add back on your point about market forces, and I tend to agree. I think right now, I think the market forces mean that there will be very good cash acceptance, because I think majority of retailers would want to serve as many customers as possible, and my hope is that will continue. But I think what is useful is to be thinking longer term now about, well, if that level of cash usage comes down and certain retailers decide actually it's not something we want to continue to do, that we don't leave people behind. And that's really why our position is that we think we should be looking at something around essential services, but not all retailers, to make sure that people are not left behind. And that starting to think about that now gives everyone a bit more long-term certainty and time to think. And just referring to what Mr Lowman was saying, a number of retailers have made some investments in how they handle cash in their stores, whether it's through self-service, whether it's through automation behind the scenes, which means it's much more effective and efficient. And they're doing that because they know there's good long-term certainty that they're going to transact in cash. And I think that gives everyone a chance to plan for that going forward.
And just one more question, which is not really about sort of the withdrawal cash acceptance, but making it far more difficult to pay by cash. So you can go to many supermarkets now and you're being ferried towards the self-checkout aisles, and there might be one person on a till that's still accepting cash, for example. That can feel quite exclusionary to the people that need to use cash, and they might end up opting out of going into the stores altogether. Do you have any views about the long queues that some of the most vulnerable in our society might have to face just to pay by cash?
Maybe Ms Aspin might want to come in on that.
Yeah, Ms Aspin, got any comment?
Yeah, I mean, I think in terms of vulnerable individuals, we know from the pandemic that they preferred using checkouts, because it's not just to do with the tangible nature of cash and how that's somewhat easier to manage. It's also that interaction and speaking to someone. So we know that there's a preference there, and the majority of supermarkets and retailers where we have agreements, they do still operate some checkouts and self-service. But if, and Ross made this point, it's about making sure that we're not leaving people behind, so we would strongly advocate that there is always an option to pay in cash.
Thank you very much. Yuan Yang MP.
Thank you, Chair. So the lack of traceability of cash is obviously a great strength from some perspectives, but can also be a vulnerability. And my colleague Harriet Baldwin MP brought up the issue of money laundering. I was wondering if anyone on the panel could speak to the question of cash as a form of tax evasion, and if that's a risk that's been brought up by HMRC or that you've encountered with your members in recent years. I was wondering if anyone had a...
Mr. Borkett, I guess, would be, because you have to do some of the checking.
Well, we do some of the checking, and we obviously ask questions at the counter about where the cash has come from, but I'm not sure I can really talk to tax evasion specifically. I'm afraid that...
Do you report it up if you think someone's coming in with an unusually large amount of cash unexpectedly? Do you report it to the authorities?
What we do is we report it back to the bank. So we'll go back to the bank to say, we've had this individual come in, there's a suspicious amount of money, we've asked them some questions, maybe that the individual, our staff felt uncomfortable declining the transaction, so our advice is take the transaction but report it, and the bank may investigate. There are some cases we will go direct to law enforcement if it's a very clear situation, but we would often pass it to the bank, who will have much more information about that customer. They can look within their account and decide whether they then should be taking that further.
And Mr. Wilson, I'm aware that many, new market traders may be on a journey from, kind of it being a side gig and they're not really earning that much profit to it being a full-blown business. Do you see a risk of not paying taxes properly if people are holding on to cash for too long in that process?
One of the things that the market industry prides itself on is sort of assisting new traders with the development of their business. We have various mentoring schemes, various support schemes, and obviously that takes into account sort of business planning and the need to organise a sort of business arrangement. Certainly, as an industry, we are not aware of significant issues with regard to tax matters. It's something that has not sort of come across our radar, and we sort of pride ourselves in the help that we give in enabling traders to sort of manage their affairs in an effective way.
Thank you. I have a separate question, if I may, about security and the risk of holding large amounts of cash on site for retailers. I was speaking to shopkeepers and shop managers in my constituency of Early and Woodley, which is in Reading, over the last few weeks. One of those shop managers told me that their shop was shoplifted as many as 10 times each day, putting their staff at significant risk. So I was wondering, to the panel, what do you see as the physical security risks of cash? Do you see that as a target for shoplifters potentially? And if so, what could be done to help safeguard shopkeepers? Maybe I'll start with Aspin.
Was Aspin, because I know USDAW's been doing a lot on this.
Yeah, I think for us, the safety of staff in stores is paramount, and that's something that we take very seriously. And we have done a lot of work around it with our Freedom from Fear campaign. So it's something we've looked at, and I welcome the fact that we're having this discussion around, security and staff in stores when it comes to cash usage. But for us, I think our view is, provided there are safe and secure systems in place, we don't necessarily see an additional risk from cash handling or mandatory cash handling in stores. And a lot of the retailers where our members work already have secure systems in place, and that can vary. So we see like drop boxes, deposit boxes in the floor, so if there's large amounts of cash coming through, they don't have to keep that in the till. Technology is being used in different ways, so CCTV and surveillance, and also staff training and how to handle cash discreetly. So we don't think, and also what we've seen in terms of retail crime is that actually it's the value of the goods in the store that is, unfortunately the main target. And And a lot of retailers are very proactive in terms of store layout and where the tills are. So I think for the benefit that it would offer to, yes, the minority, but making sure those individuals aren't left behind, like some of the most vulnerable people in our society, on balance, we don't think there's an additional risk.
Mr. Lowman?
Yeah, it's a very important consideration for two reasons. I think in terms of normal acceptance of cash, as Carrie said, it's all about the systems you have for managing that, for storing it, for putting it in safes quickly, and so on. But there's another very important role we play in the availability of cash. So that might be through operating ATMs. Sometimes ATMs are targeted for RAM raids and so on, for offering cash back, whether that's through more informally, cash back with purchase, or it could be various cash back without purchases, including to the post office and other systems as well. And things like paying out up to a limit of national lottery prizes, things like that. So not only do we have to have, it's only the acceptance of cash, but we have to have, or most retailers would choose to have, the ability to pay cash over the counter too. So so managing that from a security point of view is very important, and it is a consideration for retailers. I don't think it outweighs the benefit of offering consumers the way to transact as they wish, and also to access cash, which is particularly important to them now there aren't so many bank branches, and so the operation of our offering of free to use ATMs, cash back and other services is increasingly important.
So I agree with both those, and I guess we come at it from two perspectives. Postmasters are often running a retail environment and running the post office. Thankfully, we have not had many incidents on the post office side. We take security very, very seriously. Obviously, we're handling a lot of money, and we put various security measures in place, and certainly in our higher risk branches. However, the challenge I get fed back from postmasters that shoplifting is a real challenge right now. We had a postmaster in last month who said the post office side wasn't the issue. They had £24,000 of loss in the last year on their retail side, and that wasn't cash, it was taking of goods. And so
is that going up though over time, do you find?
We have certainly felt this year that we have seen an increase in that. I think there have been some reports this year to say that there's been some real challenges around shoplifting. So that's the challenge we see. I don't see that linked to the fact that the retailer is taking cash. I think it's a sort of a wider challenge.
Thank you very much. Thank you, Chair.
Thank you very much indeed. Dr. Cheevan-Sandra, MP.
Thank you, Chair. Mr. Lowman, can you talk me through the processing fees you have in terms of card transactions and how that works? So it's gone up in 2023, but for the point of view of an individual retailer, I'm taking a transaction, what are the fees I have to pay?
Yeah, so essentially you have a fixed cost element to that, and then you have a percentage of the transaction. So because we have quite a lot of small transactions, we're quite impacted by those where they're weighted towards the fixed cost. Some will be there'll be an agreement with the operator in terms of the acquirer and the business that you're working with to accept those transactions, which will be on a sort of blended weighted basis. But yeah, essentially, and some of those elements have been regulated in terms of the transaction fees, but then other elements of that fee, so the scheme fee, the acquirer fee, things like that have crept up, and that's where that 25% increase over 3 years comes from. So there's certainly a feeling among our members that the cost of doing business, the cost of accepting payments in any form is going up, whether that's cards or cash, and they are at the mercy of, or certainly not able to influence as they would like to, ideally, some very, very large financial institutions who are essentially setting the price they have to pay for those services.
The fixed fee then would mean that smaller transactions, so if you're asking goods which is £8, or for lower income businesses, basically they are facing a more expensive transaction cost than those with higher ticket items and higher margin goods. Is that
Absolutely,
correct?
yeah. So the higher the fixed element of that, the more we're negatively impacted by it, which is one of the reasons why there's an incentive to keep accepting cash as well. From our point of view, it's good for us to have that blend of acceptance methods as well.
Okay, so you would like to see some more regulation in this area?
Absolutely, yeah. I think it needs essentially it's a bit of with card fees, attempts to regulate are a bit like a game of whack-a-mole. Whenever you regulate one part of that, there's another type of fee that comes into that mix, and that increases the overall amount that retailers are paying. So if we're serious about keeping these services available to people in local communities, part of that has to be allowing retailers to accept payment for that on a viable economic basis, and the retailers are reporting increasing card costs.
And what about, have you heard of a tiered model before? So you pay a smaller percentage on lower ones and higher ones on higher goods to kind of reverse the incentive in card transactions at the moment. Is that something that your businesses would be in favour of?
There are various models in the market, but yes, certainly what we want is the best competition and the best choice for retailers of different types to choose the one that works best for them in terms of the profile of the transactions that they have. So yes, we'd be in favour of that being available for retailers to choose.
Would that be true for you as well, Mr. Wilson? Sorry? Would you prefer tiered models whereby at the moment obviously there's a flat fee on the card transactions, so lower value transactions, if you like, have greater processing cost as a proportion of the payment than higher transactions? Obviously you have low transactions in your industry. Would they be in favour of a tiered model, so you pay a smaller?
Yes.
Okay, brilliant. Well, I know that's a member of the regulator, the payment system regulator, but I will leave that to other members of the panel.
Dame Harriet, thank you very much. Dame Harriet, what would
Yeah, just carrying on with the same theme in terms of the interchange fees and the fees that you have to pay as people who are accepting card payments. Do you have any strong recommendations for the payment systems regulator? Because we obviously have a role in scrutinising their work, and it is quite striking how high those fees can be, and that there is essentially a duopoly, isn't there, in terms of contactless payments. So given that we are looking at cash, I'm really looking at it in the context of the alternatives, and the acceptance of cash obviously will vary depending on how much more expensive it is to take a card payment.
Essentially, top line, there should be much greater transparency of those fees, and there should be much more downward pressure on those fees, and there should be competitions to try and drive down those fees for retailers for
You're
acceptance.
a bit disappointed by the way that the payment systems regulator has been regulating this.
There needs to be much more. There needs to be much more to help retailers of all kinds, actually. But obviously, I'm speaking particularly for the sort of retailer who's often the last one in that community, and who, for all the challenges they face through COVID, through cost of living, through inflation, through increasing trading costs. Another one they have to cope with, which is really serious, is the cost of accepting card payments.
I would agree entirely with that.
Anyone got a different view? No, they're doing a great job. They're absolutely on top of it.
Okay.
No? Okay, thank you.
Thank you. John Glenn MP.
Can I just go back, build on what Dame Harriet said in terms of the transparency around costs and the apparent lack of regulatory oversight over those costs versus, so it seems to me in the short term what you've said is you want the regulators to take a more active role in scrutinising that and so on. Is there any evidence though that there are market disruptors, that there are new ways of transacting? I mean, we mentioned open banking earlier, bank-to-bank transactions. That could be hugely disruptive. Do you have a view on the pace of which that transition is happening and whether regulators could play a role in encouraging an acceleration of those disruptors to try and ease the pain of the existing fee structure?
I think that can be a disruptor. I think that anything to be done to accelerate that would be positive. I'm also conscious that our members will be experiencing the benefits of that quite late compared to retailers who deal with larger transactions. And actually where we're already seeing more bank-to-bank is in business to business. Yeah. So our members dealing with wholesalers, for example, I think that is really helpful. And we're starting to see some benefits coming out of that. I think actually particularly in food service wholesale is probably where we're seeing that coming to the fore most at the moment. But yes, I think that is the major disruptor. And it's interesting that we talk about and it's the discussion about, is there a point when cash goes to zero? We think no, actually we can't see that point where that happens. We think cash is part of the market. Is there a point where open banking replaces card payments as we effectively know them? And I think that actually is probably more feasible, plausible, in terms of looking to the future.
Ross, sorry, Mr.
Borkett. And I think that really supports the work the government's just announced around national payments vision, and we welcome the focus on that, and I think further focus and acceleration of that work through next year can help look at how open banking can become part of that, but also other payment methods could become part of that ecosystem and create more competition, which I think ultimately is probably the answer to this challenge. But I accept that will take time to filter through the system.
I know this is delicate, but can we just get to the heart of what's going wrong with the payment systems regulators' oversight here? Can you tell us what's happening that isn't suiting the sort of market realities that your members see, Mr. Lowman?
I'm not sure I'm able to give a really detailed answer. All I can say is I think there needs to be much more action to drive down those costs and to increase transparency. Essentially, I can't speak to the reasons as to why that hasn't happened to the degree that we'd like, but that's when we speak to the payment systems regulator. That's what we're telling them, and I think they are listening to that. But I think it's the remedies aren't probably happening quickly enough.
So what's impeding them from taking actions that suit your members and your interests?
Honestly, don't know. I generally don't know what's driving their decision making.
Has anyone else got anything to say about this? Okay. Can I just ask one further question? We discussed earlier, and I think Mr. Wilson talked about the range of behaviours amongst different parts of the country, and you talked about the northern urban thing. I mean, in Salisbury, I noticed with markets, I don't use cash at my market, and I just wondered about the whole use of cards as actually driving up activity, because in a population where you think that the preference is for card use, surely there's evidence that actually using cards in that environment, notwithstanding the costs of the transactions, actually encourages more trading. Do you see that side of it in some environments, market environments?
Yes, I mean, the markets industry, I mean, we have around the country around 1,150 traditional markets. There are over 40,000 sort of small businesses. There are different sort of characteristics to many of these markets. So there are markets that have declared themselves cashless. But when you actually go beneath the surface, they're not really cashless. But there is that emphasis on actually changing the methods by which they sort of operate. There are regional variations because the markets are managed in different ways, with different resources, with different sort of arrangements. So there are regional variations. I mentioned the market where currently it's considered 90% of the transactions are on card. That's a very touristy market. So you do get in those situations markets that have a particular appeal and are catering for that appeal by using a diversity of transactional means, and in that situation the card use is very substantial. So there are local differences, there are regional variations. The industry is very local, the industry is susceptible to sort of local resources and initiatives.
Thank you for your answers. Brady.
Just a quick question, something to pick up on what Mr. Borkett said about the lack of certainty about the future of cash in the longer term, which means people won't invest in cash necessarily, in the cash mechanisms. But cash is a competitor, is it not, to the card systems? And is there a risk that with the lack of certainty about cash, unlike in other jurisdictions where cash acceptance is mandatory, that actually we fall into the trap of taking out a competitor, because competition is what keeps market operators honest? Maybe a quick comment.
Yeah, I think
you're mindful of time.
I hear your logic, and I think it's a really interesting point. I think that the market is still allowing for significant use of cash at the moment, and so therefore I don't necessarily think that would make that big a difference. There may come a time where that signal needs to be given through, and that requirement or encouragement or something needs to be done to give that extra certainty. I don't believe there's any lack of certainty among my members that they're going to be accepting cash in 5 years' time, and probably much longer than that. But I don't think that's the issue right now. But I think it's a good point.
I think all I would add is the more certainty businesses have, the better about the rules they need to apply to. So I think that's helpful to give long-term indication of what is expected.
Thank you very much.
Thank you, Chair.
Yuan Yang MP.
So, thank you, Chair. Earlier we talked about the need for essential services to maintain cash acceptance. I was wondering if we could have a quick whip round the panel and you can all nominate your best bets for what counts as essential. Maybe starting with Mr. Lowman and going this way.
During the pandemic, the government defined essential retail and non-essential retail, and that would be a pretty good starting point in my view. When we speak to consumers about what they see as the most essential services, what tends to come out at the top are convenience stores, I'm pleased to say, post offices, pharmacies, and then they quite quickly talk about banks. So those banking services are clearly essential. Sadly, they're not being offered in most communities at the moment, so that's why post offices, convenience stores are stepping in to provide those services. But I would go to look at the rules in the pandemic as a starting point for defining essential.
So would you be happy with the government mandating convenience stores as accepting cash?
Well, so on a point of principle, we probably wouldn't, but I think on a point of practicality, it's actually a reasonably technical point at the moment, because I don't see any point where our members, in any great numbers, are not going to be accepting cash. But so for that reason, we probably wouldn't be support that, but I think the practical difference of them doing it or not is actually very small at the moment, and I think for the foreseeable future.
Thank you, Borkett.
Food, fuel, medicine, healthcare, utilities, I think for me would be the key ones. On utilities, I mean, be able to pay your energy bill in cash, which we know there are a large number of people in the country that still have that requirement. We're long debating internally about whether elements of public transport should be included in that or not. If you think about some individuals who may need to travel, for example, for healthcare, being able to do that if you're only a cash user is really important.
How about, and how about post office services yourselves? Yeah.
Is Aspin?
Yeah, so for us, food retail, and I think as James touched upon in terms of the pandemic, that was a really helpful definition in terms of what is essential. I mean, we've been saying for many years that retail and food retail in particular is an essential service, but the pandemic certainly reinforced that. So if we're looking at which sectors would come under that definition, we would want to see food retail covered, retail generally.
Awesome.
I think if you were designating essential services, I would say the markets industry per se would be regarded as an essential service, particularly in the context of the sort of audience and the customers that we deal with. So the industry as a whole.
So you want to see your retailers mandated to accept cash?
Yes.
Yeah. And if that did happen now or later down the line, I understand the point that Mr. Lowman made about in principle that there's it might not make so much of a difference in practice. How do you think one could manage or help manage that regulatory burden if it does become a burden and minimise that cost? I'll start with Mr. Lowman.
The burden of mandating accepting cash. Well, at the moment, the practical implications of that would be relatively small. But I think that, things I would encourage whenever government changes rules to think about support for businesses who would have to make practical changes to their operations. So, for example, if a business was not accepting cash and was mandated to do so, what could be done in terms of supporting investment in systems and tills and cash in transit and all the other things that would come with that. And there are mechanisms for doing that, again, which we used during the pandemic, for example, like the business rate system. For supporting those businesses, or through investment incentives and other things. But we have to recognise where at the moment the total bill will be tiny at the moment, but we had to recognise where there's an additional cost that would arise for businesses and acknowledge that and support them in meeting that cost.
Do you see that bill changing quickly over time? Or
No,
do you think
I'm expecting if I was back here in 5 to 10 years' time, the number, if we have still 50,000 convenience stores, hopefully, I expect it to be, it's still a small handful that don't accept cash.
Thank you. And Mr. Wilson and then Mr. Borkett. Yeah.
I don't see a major problem for us. The cash is such a vital part of the markets industry makeup at the moment. I think that any mandating of the requirement to sort of accept cash would not be a problem for us to manage.
And Mr. Borkett?
I think two thoughts on that. I think if we get to a point where cash acceptance has reduced and then there is a change in the rules and it has to be reintroduced, there could be a cost in doing that. And I think that's why it's important this conversation now to be happening early while we don't really feel like there's an issue, so that we can give that certainty, long-term certainty to business, but we're not creating a reversal and reinvestment.
Very good point.
So you'd rather see it happen earlier than later?
Yes. The second thing I'll say is there's some good international comparisons where other countries have looked at exemptions where they were concerned. So I think Spain, where very small businesses, they do have some exemptions around it. They have some exemptions around if you just don't have change that day, you're allowed to not offer it that day. And over a certain value, get into high values, actually it wasn't an issue. I think that'll be a problem in essential services. But there can always be looks at exemptions if there are particular concerns in areas.
Thank you very much.
Thank you very much. Rachel Lakenby.
Thanks very much, Chair. There's a couple of tensions coming out of this panel in terms of the evidence that you're bringing forward. The first that I'd like to draw out is there's a contrast between mandating around outlets. So Mr. Lowman's talked about do the convenience stores, do the post office, maybe, or these would be the areas, the pharmacies. And then others have talked about the product, do the fuel, do the food, do the medicine. What risks, I can see real risks of just choosing an outlet, because there are non-essential goods in outlets, because my people are always saying, can't we go into that shop and buy some sweets, which are non-essential goods. So how do you overcome that? Some people that I know in my life.
No, sure.
To go into.
It's a very good question, and again, we experienced this during the pandemic when the question was, well, this is defined as an essential outlet because it's a food outlet, including convenience stores, and we sell sweets and we sell also things that you can have a long debate about what's essential and not essential as products, but they define as essential outlets because of being food outlets. And I think you do have to define it by the outlet. I think if you were to get to the point of saying, well, here's, as a business, we're saying you're mandated to accept cash, but only for certain things, I think that's almost impossible to manage and actually almost impossible to enforce, really. So I think you have to take it by outlet. And also, you've got one set of systems. It doesn't make a difference to you as a retailer if you're accepting it for a courgette but not for a chocolate bar. I mean, it's essentially the system's the same that transaction runs through. So I think you would probably have to go to outlet level and make decisions about what was deemed to be essential if this was deemed to be the right approach.
So a scenario that you may well knock down, but you're selling magazines in an outlet, it's beginning to cost more to receive cash. You in your sector would accept the mandate even though someone was buying something essentially non-essential from the outlet?
I mean, it is quite hypothetical, but yeah, I would expect our members, to have their own decision about whether they accept cash or not, and as in almost all cases the answer would be yes, they do. If they are mandated to, but otherwise wouldn't, which I think would tend to a really small number of outlets now, then they would accept it. I think they would accept it for everything. And there are different margins across different products. If you had a lower margin product and you felt that the cost of taking in the cash was disproportionate because you weren't dealing with much of it, then maybe you would, you had an incentive not to accept for certain low margin products. I just think it'd be too complicated. I think retailers, and again, this is driven by customers fundamentally. Yeah. I think they would just say we accept cash for.
You think
for
there'd be an adaptation?
Yeah, I can't see them saying we'll accept cash for certain things and not for others. It'd be unlikely.
Mr. Borkett, you talked about choose the product, food, fuel, medicine.
I guess I came from the consumer's need and what are the things that we are worried about, the individuals are worried about, and what are the essentials that they would need. So I guess that's the angle I took it from. I probably have to think a bit harder about actually how that would play out and the unintended consequences potentially of whether you did it by the product type versus who that provider is. I'm not sure I have an answer for you today, but a good thing for us, I guess, to all consider.
An unintended consequence that I would worry about is if you mandated the outlets and that large supermarkets weren't involved, there could be a real price differential, and I think that's an unintended consequence that I would worry about. There's just another tension that I wanted to draw out, which is Mr. Borkett is saying do something now, give stability, and I think so is Mr. Wilson, but Mr. Lowman is saying it's all fine, we don't need to do anything, so cash is being accepted anyway, so don't do anything. Can you elaborate more, Mr. Wilson, on do something now, just to try and tease out because there's quite a difference there's quite a similarity of experience, but a difference in proposal coming from the panel.
Mr. Wilson, don't worry, it's not fire alarm.
Sorry, it's not the fire drill. In terms of sort of the position of the market industry, I can only say again that cash is absolutely vital to our well-being. So we've got to preserve. We have to seek to preserve that position, and ensure that cash continues to be an important integral part of the industry. I said that I felt that the requirement was to sort of designate the industry as an essential service, so that would mean we got that action. But in terms of sort of action now, simply looking for that acknowledgement and that assurance that cash will continue to be an important element of the transactional affairs of the markets industry. That's our position.
I mean, I think I've covered a number of my points earlier, but I guess the only one I'd add is that we all know it takes time to implement new rules, and I think we should not wait for the problem to occur. We should try and think about it now, give everyone some certainty, and then avoid it happening in the first place.
Thank you very much, Ms Blake. John Glenn MP.
Yes, can we turn to the sufficiency of the electronic infrastructure that underpins payments? Mr Lowman, could I ask you how your members feel about the stability of those the payments and whether they have confidence in it?
I mean, for the most part they do, but we have seen a number of incidents where individual retailers or a number of retailers have been affected by, I mentioned CrowdStrike earlier was the example. Right. I think retailers are very conscious of that, and I think that's one of the reasons why they'll continue to accept cash for a very long time, is that as it's the more reliance on technology, the more and the more systems we have in place, the more links in the chain that are standing up those systems, there is more risk that comes with that, and I think they've seen that. So it's something that our members are very conscious of. One of the reasons they want to continue to maintain cash, one of the reasons why it's also very important for them to maintain availability of cash for society more widely. But of course, these things happen. We're always in a state of being relatively finely balanced about where cash is, the methods of payment that are being accepted. So, for example, we had members who were affected by CrowdStrike on the Friday before Easter or something like that, but on a very, very busy trading day as people were heading out on their holidays, and they obviously those retailers still accepted cash. In fact, they offered cash machines, free to use cash machines in their businesses, but they were empty within about half an hour because obviously consumers then needed to get cash to pay with, and so they weren't then able to offer that service more widely to the community. So the whole system is at any time actually quite finely balanced in terms of how much cash is out there in the market and cash machines and the ability to accept. Now clearly those are, if you add up all the transactions, very, very few are affected by those sort of outages, but when they happen, they have quite a significant impact obviously on the retailers, but also widely. And on their costs in terms of sorting it out, yeah, and essentially lost sales as well. I mean, there are some retailers who were saying this was the times of relatively tough trading for convenience and for many sectors at the moment, and this was a day that had been earmarked, and the sun came out for the first time in a very long time as people headed off on holiday, and the retailers some retailers in that area were not able to accept card payments, so it can be very consequential in terms of when it might hit. And say that is not the only example of when card payments haven't been available in certain retailers at certain times, and there have been a number of documented incidents over the last few years. So yes, it is something that affects retailers. It's one of the reasons why accepting cash in a variety of payment methods is really important to them.
Thank you. Mr Borkett, if Post Office goes offline, what happens? Have you got any good contingency arrangements in place? I mean, people would want some reassurance from you, I should imagine.
Yeah, so you can imagine the resilience of our systems are really important. We work very closely with our various suppliers and network providers so that we have backups. So, for example, if our main data centre were to go down, we can flip to a second data centre. Thankfully, we don't have many of those types of instances. The other benefit we have is if an individual branch were to go down, then we can obviously direct customers to another nearby branch, and so we have a good physical resilience as well as technical resilience. I mean, back to your previous question, we don't see feedback from postmasters. They're concerned about resilience of the sort of electronic payment systems, but I think very clearly cash is an important backup in a scenario where we have instances, and we saw some in the last few years, and we see a big increase in cash withdrawals on those days where there's an outage of some form with a payment system.
Thank you. Now I turn to Ms Aspin in terms of the familiarity you have through the negotiation of USDAW with larger retailers. Presumably that is reliant on electronic systems for customers to be able to pay for things. Do you have any concerns around the sort of durability or of the electronic infrastructure?
Yeah, I think generally speaking we would have concerns about systems going down and people not being able to buy food. So it's not something that we've experienced yet, but it's certainly something that I think we need to be aware of. Yeah.
Thank you. Can I just ask one final question for anyone to respond to? I mean, I guess several years ago Sweden moved very quickly to cashlessness. They've sort of now pulled back from that, and we see France, Norway, Spain mandating use of cash. Despite sort of surveys showing what public think, we haven't mandated that cash use in the UK. What do you think about that?
Mandating acceptance of cash.
Yeah.
And I think we discussed that a bit today. Yeah. As in principle, we would rather that wasn't required by our members. I think it is a relatively minor practical issue at the moment. I think it will be for some period of time.
In terms of this whole, the Swedish experience, it is quite instructive as an example of where gone down one route thinking this is the future. It hasn't been, and in terms of the legislation around sort of civil contingency, I visited the country, Sweden, in April. They are concerned about all these different scenarios. How do you look at the UK's resilience in the context of those experiences in other countries?
Borkett? I think if you look at those countries you named, they all use cash to very, very different amounts. So you're right, Sweden, Norway, I think are much further along that journey than we are. We're sort of maybe somewhere towards the end, but not as far.
Yeah.
You go somewhere like Spain, very, very heavy use of cash still. Yeah. And so when they mandated that all retailers had to continue taking cash as payment form, I don't think that was a big deal because actually it's a very heavy use of cash already. So I think it's important to look at that context. I certainly think the feedback, and what we've looked at with someone like Sweden when they've had to sort of pull back from that is they have clearly left people behind, and they have been worried about not just the backup of having cash as an alternative payment, but those who were reliant on it just not being able to continue to operate. And I think there's some useful lessons there about how we balance it. I think that's one of the reasons we're very supportive of the new access to cash regulations that have come in to try and really provide a managed process around how cash is operated as it does decline slowly across the country. And I think this final bit around acceptance is what we need to consider to make sure we get that whole system working effectively.
I think in the market industry, the situation is working reasonably well at the moment. I mentioned earlier, in terms of sort of using card and other arrangements, there are issues to be addressed, such as the level of Wi-Fi. In terms of actually getting cash to go and spend at the market, there is an issue about the availability of cash points. We have numerous examples from our members of significant reductions in cash point numbers over the last 10 years. So actually getting the cash is another issue. But we think at the moment we are managing a gradual transition without the need of regulation from reliance on cash to embracing much more technology. But cash will continue to be such a vital part of markets. It's part of the history. It's a part of the way that markets have actually operated over 1,000 years. We would not want to see sort of the mandating unless you felt there was strong reason. And if there is mandating, we would ask that the industry has a privileged position in that because of the nature of the job that we do and the way that the transactions are sort of conducted on the markets.
Well, thank you very much, Mr. Wilson. We began on markets and we've finished on markets. And I think one of the things we've really heard very loud and clear today is that we have thriving cash-based markets still in this country, and they're a very important part of our culture. And I think we all say amen to that. But COVID did drive traders to look at online payments, and so that's been quite interesting that there's been a change there. We've also heard that cash is still very much used, and it could leave people left behind if it's phased out completely. That definitions of essential items are quite challenging, as we discovered in COVID, and that access to banking is pretty key for small businesses as well, in order to make sure that cash can be used, as well as the availability of cash, which is not the main focus of this inquiry. But can I thank our witnesses very much indeed for their time. We will be having a round table with various groups that are affected towards the end of January, and then we'll have the Minister in to put some of the points to her about this issue. Can I thank you very much indeed? Order.